Deep cuts on the Lal Street as markets see an all-round decline. 42 out of the 50 nifty stocks end in the red. Overall market capitalization worth 13 lakh crore rupees wiped out in a single day.
Mid-caps and small-caps turn negative for the year as the sell-off continues. PSU stocks see a sharp fall with the Nifty PSU index declining 7%.
ITC's largest shareholder, British American Tobacco, raises nearly 17,500 crore rupees by liquidating a 3.5% stake in the company through block deals. The ITC stock surges over 8% in trade, adding 33,000 crores to investor wealth.
Hello and welcome to Markets Forward, your go-to show where we aim to tell you what went on in today's trading session and also get you set for the next trading session. I'm Rashtra D'Souza. Joining me as always, Surbhi Upadhyay. Surbhi, it was that sort of a day.
And I think we can stop here. But no, we have a job to do. We have to tell people what it was all about. It was brutal. It was vicious. It was relentless. And the thing is that this fall has been happening consistently. Today was the third day when mid-caps and small-caps were getting battered. The vengeance of it, the momentum of it only increased. So over the next 20 minutes or so, we're going to tell you all about it, get you all the details on today's market action, a lot of the important opinion on what investors should be doing. But Nigel, let's kick it off. We do have to look at what were some very painful stats at the end of trade today.
You know, today it was that sort of a day when all the indices were down. They all fell down, really. But if there was that one lone ranger, it was ITC. They're standing in the corner trying to hold one end up. And the contribution chart will tell you. Because on a day that the Nifty was lower, you had only one stock on the Nifty that was up more than 1%. There were a few stocks in there, some private sector banks that were up close to around 0.5% approximately. But that contribution chart will tell you the picture. ITC, the lone ranger in there, trying to put on close to 35 points on the Nifty. And the advanced decline ratio, you know, Surbhi, on a day-to-day basis, we say it was a bad trading session. There was only one stock that was advancing and 4 stocks were declining. And 5 stocks were declining. Today, you had your work cut out. You had one stock that was advancing and 22 stocks that were declining. And a lot of stocks were at lower circuit in today's trading session as well. So that gave you the sense that the easy money has been made, particularly from the broader markets. And there was a considerable amount of money being taken off the table. If you want reasons, I could give you a few. The regulator has wrapped the knuckles, for a couple of companies out there, whether you're talking about SEBI or whether you're talking about the RBI as well. The other factor is that there's tax harvesting that's taking place, which could be another factor, and advanced tax payments as well. So those are the broad reasons. But if you want to put it simply, you just pull up the mid-cap index for the last 1 year. And you'll see, and the small-cap index for the last 1 year, these indices went up 30-40%.
Correct.
So just money being taken off the table. I think that's the day for you. 50% on the mid-cap index in the last 1 year. So tax harvesting, advanced tax, froth in the system, fine. Take some money off the table, it appears so.
And, these indices haven't seen a correction, not a 10% decline, but many of these indices have got that 10% decline in just 3 days. 3 days alone. So today's tally for the mid-cap, for the small-cap and for the micro-cap index, I mean, it was fairly painful out there. These indices were down anywhere between 4%, 5-6%. If you're looking at the correction that has been ongoing now for the week as a whole, the micro-cap index so far, and we're only down 3 days, by the way, already lost about 11%. If you're looking at the Nifty mid-cap, it has lost about 6% so far in the week, and the small-cap, the pain is quite similar to the micro-cap, almost 9% gone in 3 trading sessions alone. And this is at the index level. Individual stocks, of course, have lost a lot more. Today, we'll talk about the PSU stocks because that is where we've seen a huge rally. So that is where we started seeing a lot of deep cuts as well. So all that coming up as we go forward. Let's tell you about the lineup on the show. Well, of course, we'll get you all the deeper contours of that fall. So Vivek will be talking about the individual movers and shakers. And there will be lots of red on his screen as well, I'm sure. The stock of the day, of course, is ITC, one of the lone rangers on the green side. That big British American tobacco block deal has finally happened. So Mangalam joins in with all of the details there. And then, of course, we'll talk about some of the key triggers to watch out for after this big fall, the events that perhaps could be dominating the market's mind tomorrow as well. But let's get started. Over to Vivek. Not an easy day for the bulls, Vivek.
Well, you're absolutely right. So before we go to individual stocks, let's give some perspective as to what exactly has happened as far as the broader end of the market and the kind of sell-off that we've witnessed over there. So we looked at 3 key indices. The first one is the mid-cap 100 index, the small-cap 100, and the NSE 500 index. These three indexes, are a very good gauge of what exactly is the sentiment when it comes to the broader end of the markets. So first, have a look at the mid-cap index. Today, down for the third straight session. Of course, majority of the selling pressure came today. Just the last three trading session, it's lost over 2,700 points, a significant selling pressure. And today, the mid-cap index turned negative for 2024. Now coming to the small-cap index, again, down for the third straight session, over 1,300 points lost in just the last three trading sessions. And in fact, if you're talking about this particular year, the small-cap index is now down over 5%. Some significant selling pressure coming in over there. At one point during today's trading session, the small cap index actually had an advanced decline ratio of 1:99. So only one stock and the broader end of the market was actually trading in the green. Now coming to the NSE 500 index, down for the third straight session, down 800 points in just the last three trading sessions. And when you're talking about the advanced decline ratio, at around 3 p.m., the advanced decline ratio was somewhere in the range of 13:487. Again, gives you a sense of the kind of sell-off that we witnessed. So where did the pain lie? Let's have a look at some of the key indices today that saw significant selling pressure. The first one, of course, was the BSE Utility Index. So utility stocks across the spectrum saw significant selling pressure, down 9% in the last three trading sessions, and the entire list of stocks, look at names like SJVN, NHPC, CSE, NTPC, Torrent, all of these stocks today saw significant selling pressure. The Nifty Realty Index, we highlighted this yesterday as well. Actually, there's a certain amount of pain and a lot of selling pressure, but today it got exaggerated. This particular index is down 10% in the last 5 sessions, and all of the names, look at Soba, Godrej Properties, all of them saw significant selling pressure. Now coming to the Metal Index. The Metal Index down for 5 straight sessions, down over 11% in the last 5 sessions, and again, all of the stocks, especially the PSU metal names, they were the ones that witnessed or bore the brunt of most of the selling pressure. And a lot of stocks in the 52-week low list today, surprising because we've seen a lot of upside as far as the broader end of the markets. But today, both large caps as well as mid cap stocks today hit the 52-week low. Some key names like VIP Industries, VRL Logistics, Z Entertainment, Sumitomo. All of these stocks had 52-week lows in today's trading session.
Okay, all right, Vivek. Thanks a lot for that. 225 stocks, I think, hit 52-week lows today. So that's telling you the kind of pain that we saw. Joining us on the show, we have Mayuresh Joshi, Head of Equity Research at William O'Neill, as well as Shrikant Chauhan of Kotak Securities. Gentlemen, thanks so much for joining in on CNBC-TV18. Shrikant, let's get to you first. How are the technicals looking? How low can we go? What's it looking like on the charts? Today, we broke the 20-day MA. We broke the 22,000 odd mark as well. Do you think we can go deeper on the headline index first?
Yeah, Nigel, in fact, it was not at all expected the market can fall like this in just one day. Yeah, we were expecting that the market can correct below 22,200, but the fall was more than the expectation. But now as the market has fallen to the important levels, and in fact, it has broken the level of 22,000. Now the next levels to watch out for would be around 21,800, 850. Where the market has spent maximum time. And in case if we see furthermore weakness from the global markets, then the fall can extend up to 21,600. So that's the maximum that I am seeing on the chart. So tomorrow, in case if we see any sell-off in the first half, then I think that should be an opportunity for investors to invest in, because now the markets are heading toward those levels, which are really I can say attract some buying from maybe those investors who are still sidelined. So 21,800 to 600 is the range where we should look for adding some positions. And on the higher side, 22,200 will now act as resistance for the market.
Okay, got that. Thanks very much, Shrikant, for the advice there. Stay on, we'll have some more questions for you. But let us talk about the stock of the day, the lone warrior, the lone ranger, ITC. That big block trade in which the market believes that British American Tobacco is the seller. That deal got done. We have Mangalam joining in with all the factors at play and why the market seems very relieved and actually happy. Stock was up 4-5% by the end of it in such a weak market. Mangalam, take it away.
In such a weak market, in fact, it was the best move that ITC saw all the way since September 2021. And there are 3 reasons why. The first one was supply, the second one was demand, and the third one was valuation. So let's talk about the supply and that having been done. BAT, which is among the oldest shareholders of ITC, went ahead and sold 3.5% stake in a block deal worth nearly 17,500 crores at an average price of 400.4 rupees per share. The reason why the street is happy with that is because after this sale, BAT's stake is now around 25.5%, and they're also locked in with their stake for the next 180 days. So no fresh supply likely in the very near future. Let's talk about the demand. Because this deal was done in the block window at a discount of just 1% of the previous close price, is telling you that there was strong subscription to ITC's paper as well. So that's a big positive. And the third part are the valuations. So the ITC stock was actually an underperformer until this large date took place, largely because of the supply overhang. And from 26 times, the valuations moved all the way lower to 21 times. And this morning itself, we had a couple of brokerages upgrade the stock, the likes of CLSA and HSBC, Morgan Stanley believing that, there is room for the target to be around 491 rupees per share as well. So there was a supply overhang which is gone, there was demand which was strong, and finally there are valuations which are favorable as well. All of these things meant that the ITC stock was smoking hot in a weak market.
Oh, yes, it was. In fact, let's see what the charts say on this, because the fundamental bid is now done and out, at least in terms of that big stake sale. Shrikant, coming back to you, ITC is still, I think, about 13-14% off the high, right? It almost touched 500 rupees. What do the charts indicate now? Do you see more momentum building up again? Or do you need more evidence to say that?
Yeah, Surabhi, I think the way the stock has fallen and not participated in the entire up move of the market, it was around some 500 levels. And from there, all the way it went down to the levels of 400. So it was down nearly 20-25%. But while looking at the entire setup of the stock, I think the stock was very close to its important support levels before the deal. And I think after the deal, now that hangover is over. As the stock was very close to the important supports, volumes are there, and also price expansion. I think at this price, stock look really good to buy and hold. I'm expecting stock to again rebound to the levels of 450, 455 if the market starts stabilizing. So at these levels, certainly it's a buy.
Right, Mayuresh, I want to come across to you. The last, say, 8 to 10 months, we have seen some of these MNCs, they are saying, hey, the Indian listed company is trading at these valuations and we are trading at much lower. Case in point being a Whirlpool, trading at 7 times. The Indian listed entity trading at around 40 to 50 times. How would you view this? Some of these foreign investors or promoters, they are cashing out. The 3 notable names that come to mind, Timken, Whirlpool, and now BAT. How do you view this?
So I think 2 ways to put this, Nigel. I think one, I think the Indian subsidiaries have done phenomenally well because the demand factors have played out quite significantly in terms of their earnings growth. So earnings have held up pretty well for all 3 companies under consideration. Discretionary spending going up, the expectations in terms of infra spending going up in the case of Timken as an example. And ITC, I think all its business verticals, including cigarettes, including the hotels business, and including the other FMCG business has done phenomenally well. I think the paper ports business and the agri trading business might be a little volatile because of deficient monsoons and other reasons thereof. But generally, I think the consolidated performance has been extremely good. Now, if you probably look at how the expectations of earnings in the next few years are also expected to be, consumer spending expected to be on the higher side. Domestic capex spending, infra growth, manufacturing growth expected to be on the higher side. And therefore, the levers that are probably required for Indian subsidiaries to fire on all cylinders, they probably are existing at this juncture, which is probably missing in large parts of the globe as we speak, and a very tepid recovery expected only over the next few quarters in the subsidiaries that they're present outside India. So I think the Indian subsidiaries are doing exceedingly well. I think a part of that money is probably being taken off by their MNC parents to probably shore up their own individual balance sheets at the parent level itself. So I think I look at it as the India growth story probably continues. It's the stake sale that the parents probably want to strengthen their balance sheets at the holding or the parent level itself.
Okay, all right. Noted that point, Mayuresh. Well, the PSU index, after a stellar rally in 2023, has corrected, and it's now down about 9% from record levels. Given the recent market volatility, mutual funds, well, they have been very active in the space in the past 1 month or so. You have Hormuz who's joining us to break all that data down for us. Hormuz, over to you.
And on a day like this, we cannot not talk about PSUs, and as they continue their trend of dominating market conversations. Now, the PSE index has corrected almost 10% now from its peak. But what have these funds done with these stocks in the month of February? Well, some of these funds exited some stocks completely while they bought stake in newer ones. Now, let's start with the fund houses that have exited. Now, here we have stocks like SJVN, Bank of Baroda, SAIL, RITES and IRCON. Now, these are the stocks where some mutual funds have completely exited their positions last month. Now, there are also stocks like NHPC, Oil India and NALCO where mutual funds have paired, not exited, but paired their existing positions last month. Now, let's take a look at the funds that have made these moves. And we have first up, we have SBI Mutual Fund, which has exited stocks like SJVN, Bank of Baroda, and also, while Quant Mutual Fund has exited stocks like SJVN and railway names like IRCON and RITES. While SAIL saw Nippon India exiting, ICICI Prudential has exited Bank of Baroda. Now, these exits have had a negative impact on most of these stocks, as barring Bank of Baroda and RITES, the other stocks fell anywhere between 1 to 8% in the month of February. Now, on to stocks where mutual funds paired stake. While ICICI Prudential exited some names above, here too they have paired stake in names like NHPC and Oil India, and even SBI Mutual Fund has paired its stake in stocks like NALCO, all of which have had a stellar run in the last 12 months. But it's not as if mutual funds were making a beeline to the exit door when it comes to these PSUs. If they have exited many, they have bought new ones as well. Now, here Kotak and Quant are leading the pack, where Kotak has acquired stake in stocks like Oil India and Indian Oil, which has gained over 30% in the first 3 months of this year. Now, Quant has also bought stake in stocks like Container Corporation, the worst performer on the PSU index in FY24, but with 65% returns, I might add there, and IRCTC as well. Now, we've also seen SBI Mutual Fund buying stakes in stocks like PFC, but that name underperformed in February, declining over 10%, while most of the other names saw gains between 10 to 30% in the month of February. Lastly, there are stocks where mutual funds have topped up their existing positions, and PFC finds its name here as well, where Kotak has increased its existing positions, as it has done the same for BPCL as well. Now, PSU banks also find some favor here, as SBI and Indian Bank have seen Axis increase its positions, while BHEL and NALCO have found favor from Quant. So the churn continues in the PSUs. There is some profit booking. There is a correction ongoing. Then there is a $1 million question that is there in the mind of every retail investor, and that is to buy or not to buy.
Yeah, well said. Perhaps more difficult than to answer to be or not to be. Thank you very much, Hormuz, for joining in with that very interesting analysis. Well, we've been trying to get perspective from market veterans, a lot of the mutual fund guests as well. So let's start getting you a slice of that opinion. Veteran banker Uday Kotak says that the Indian market is not in a risky territory. Speaking at the SEBI NISM research conference, he acknowledged that there may be a little froth in the market, but things are not out of control. Take a look.
That I believe at this stage, we are nowhere near that risk. And there are enough checks and balances in our system today to compare ourselves in serious bubble territory. There may be early froth, as if I can use the phrase from what you said a few days ago, but I would say that it is still froth, a little bubbly, but not out of control.
Well, let's get you some more market opinion. Prashant Khemka, White Oak Capital Management, believes that there is some overconfidence setting in the small cap space. Referring to today's fall, he said that the equity markets cannot be a one-way street. Nilesh Shah, on the other hand, of Kotak Mahindra, AMC, added that this correction in the markets is an unwinding exercise of excesses. Take a look.
If you look at over the last 12 to 24 months, or even I would say somewhat longer post-COVID, it's been somewhat of a one-way street, and equity markets. So there was this some overconfidence setting in amongst investors, particularly as it relates to small cap names. Small caps, despite the 10-11% downtick that we've seen over the last few weeks since the high that was reached earlier this year, it's still up 60+% from March of last year. Yeah, at its peak, it was up 80 or nearly about 80%. So there was a considerable amount of excess that has been built into certain segments of small caps. And so it's a timely, I think, I would say even an awaited correction
So one thing I can reassure everyone, the stress tests are not going to give any cause for this correction. If we see last 1 year, it was 1-2 ka 3 market. The large caps delivered about 33% return. Mid and small cap delivered about 61 and 69% return. And small cap micro caps delivered about 93% return. So this is the unwinding of the excesses rather than, the stress test of mutual fund. It is stress test of leveraged retail investors.
All right, so that's a lot of the opinion that we picked up on the street today. Well, with that, we are going to thank both our guests, Mayuresh as well as Srikanth, for joining in and offering us some advice on this, what was a very, very rocky day. We'll take a break, come back with the top events you need to watch out for tomorrow.
Welcome back to Markets Forward, where let's run you through the top corporate voices that joined today. Titagar Rail Systems has bagged an order worth around 1,900 crore rupees from the Indian Railways to supply wagons. The Vice Chairman and Managing Director, Umesh Chaudhary, believes that they can execute this order in 2 years. He's expecting a margin of around 10 to around 11% on the recent order. He also added that they will hit a run rate of 1,000 wagons per month by next year from the railways to healthcare. We have Ameera Shah, the Managing Director at Metropolis Healthcare, said that the competitive intensity has reduced as compared to, say, a year ago. They're planning to add around 600 to 650 centers and 30 new labs in the next year. Metropolis rolled out a new pricing strategy in January, which Ameera believes will impact their sales in the fourth quarter.
Moving on to retail, V-Mart is seeing some green shoots. Managing Director Lalita Agarwal told us that demand has been trending upwards, but pain exists in smaller towns due to higher inflation. However, he expects FY25 to be better than the fiscal year that's closing out now, with double-digit revenue growth expected in the new year. V-Mart has reduced prices by 10% this year and believes that this move will support demand.
Well, before we wind up, let's run you through all the key market events you need to watch out for. Sonal standing by to run us through that list. Sonal.
Oh, well, thanks for that. We do have some macro data that we'll be watching out for. WPI data for India tomorrow at 12 noon. So that is an important one. In terms of stock-specific news, there's EGM for Fairchem Organics and there's Capital Markets Day for Tejas Networks. So these are some of the stocks that will be in focus. Now let's go on to the global one because Foxconn will be coming out with its Q4 earnings. There'll be oil market report coming in from the International Energy Agency, and Hong Kong will also report their Q4 industrial production data. In terms of the US markets, we'll have the PPI data, the retail sales and the initial jobless claims as well. So these are some of the events we'll be watching out for.
Okay, all right, Sonal, thank you so much for that. And with that, it is curtains on this edition of Markets Forward. Thank you very much for being with us. We will see you with the markets bright and early tomorrow, but you don't go anywhere because all the news and updates continue after the break.